So thank you very much for everybody who's tuned in today. I'm going to be talking to Ian Lance from Temple Bar in a minute. But as usual, before we do that, we've got a little bit of news to cover. Finally, we've got to a point in the month where people seem to have gone on holiday and things are quieting down a bit. So I've picked out a few things. Basically, these are all things that I hold. That's not the reason I picked them, but nevertheless, I think they're interesting. Bluefield, NextEnergy Solar first. Both of these announced quarterly NAV numbers this week, and that's the reason I'm picking it up. And if you look at the Bluefield chart, and it's actually more obvious on the NextEnergy one, the NAVs have been trending downwards for a long time now. And I guess this is starting to be slightly unnerving. It would be good to see that come to an end at some point. Now, the main reason for that is power prices. So we've had yet another revision to power price forecasts. This is looking out not in the next few months, but looking out for decades hence. Most of them use a whole range of different power price forecasters and take the average of them, or it depends on how conservative they are and the way they do this. So what I'm saying is that this is not just one forecaster's numbers that are coming down; they all are. I'm not sure I understand it, as I will explain, and I'll talk about it a bit more in a minute. Just a few other things that were going on in the middle of this. Solar first, I thought this was horrendously confusing, but basically what they're saying is that actually the generation that they achieved wasn't too bad, although it could have been better. The reason why it was good was because we had a lot of sunshine, as we've all been experiencing. But coming with the sunshine normally comes lower wind speeds. But they do say that the wind speeds did pick up in the quarter, but the real problem was that they had a lot of outages. So that's both on the solar portfolio. So DNO is distributed network operator or distribution network operator, sorry. So they are the local grid basically that connects your solar plant or wind plant to the national grid. So if they've got an outage, then obviously you can't actually sell your power. And that's particularly bad in the wind portfolio. Now the Bluefield's got a lot of wind turbines, and they're just scattered around the country, but they're mostly like ones and twos. They're like sort of fairly small. So what we saw there is quite a big drop, and I think that relates to they've got a couple of bigger plants, and that's the reason that we had an issue. So that's generation side of things. On the portfolio, they've actually done another disposal, which is good news. I've always loved this thing that they've done. They've done this joint venture with GLI Infrastructure, which is a consortium of UK pension funds, and they are selling into that assets and using the money that they free up to reduce their debt and to fund the stuff that they want to do in terms of new builds. So they've actually sold an existing operational plant, Moxwell Farm, and a battery storage project at the same place into the joint venture. But they've also sold in a portfolio of ready-to-build projects. So these will be developed, but Bluefield won't have to put as much money in. And the money that it does put in is sort of come from GLL anyway, and obviously it gets to manage these too. So this is sort of ticking the box for shareholders. This just doesn't really work for them. And they've got contracts in place for these new projects that they secured in the auction rounds. So the AR5, which was 3 years ago now, 2 years ago now, 2 years ago now, they got £47 a megawatt hour for. That's in 2013 prices. So in real terms, it's about 68 quid. The ones that they did last year, they got just over £50 a megawatt for. That's about £72 today. And they contrast pretty nicely with the current power price. So basically what we're saying is that they will earn money in line with the current power price, but those earnings are indexed using CPI. So that will gently rise over time with inflation. So that gives them a sort of guaranteed income for those projects. That means that they have comfort that it makes sense to build them. And that's the whole point of doing these auction rounds. And then we're waiting for the result of AR7. That's going to come out. I'm guessing that the fourth asset will go into that. And there's been talk that the prices will be higher again, and we will see what happens. Anyway, so that's freed up £38 million. That helps reduce the revolving credit facility and help fund some projects. So tick, tick, tick. NextEnergy Solar, we've got the similar sort of hit from solar power price forecasts in there. We saw a little uptick from inflation. I think actually with all of these funds, you're going to see another uptick because RPI for July actually came in at 4.8%, and in their numbers, they're still assuming it was 3.9. So it could be that inflation gets revalued upwards again within the NAV, which is good news. So that's helpful, but this just shows you graphically what's been going on with the power price forecasts. And you can see there, so the grey line is the oldest one of those. And in March, they brought the near-term numbers down quite significantly and slightly upped the long-term forecasts. But look at the June curve, and it's way behind over almost every time period. So it's actually they've actually really slashed the forecasts here. And the assumptions that are going into the June NAV are even lower again. And to me, this doesn't really make sense because if you talk to Pantheon Infrastructure and you read our note on Calpine in there, or if you talk to Ecofin Global, or if you look at some of the stocks in Polycap Technologies portfolio, power generators almost everywhere are seeing boom times because the price of power is being driven up because demand for power is so strong because it's coming from AI. And I don't see how that's going to go away. And I don't really see how then you get these dramatic drop-offs in power prices that they're forecasting here. Maybe way out you get fusion and all this sort of stuff. And then, we never know about that. But to me, this seems overdone. And I wonder whether we're finally at the floor of this. I really hope so, because if we just still keep, edge down, that's really not good news for sentiment. Anyway, the problem that we've got with NextEnergy now is that because the NAV's come down, and obviously the debt doesn't come down, the gearing is about 99%. They look at it on a gross asset value basis, so 49.5. As one of the brokers has flagged, that they've got an investment policy limit of 50%. So they do have headroom on the revolving credit facility. They could borrow more money, but the investment policy wouldn't let them once it gets below above 50. They really do have to get on with selling stuff. Now, the structure of the debt is such that we're not worrying about this, this sort of fire sales of assets and all this sort of stuff. This is not where we are. The key to this is that about almost half the debt is preference shares that don't have to be repaid at the earliest till April 2030, and actually they can choose when they want to repay them and beyond that, so they can delay that. So that really isn't a problem. It's just a question of the constraints that it puts on the business in terms of what they can do. Shareholders have been a bit antsy about the discount and everything else for a while. They've been, because the discount's too wide, that's triggered discontinuation votes. Last year, the result was 6% in favour of discontinuation. This year, that's doubled to 12.2. I told you that's not the end of the world, especially because not everybody's voting, so it's only about 7% of the share capital. Nevertheless, shareholders are getting a bit fed up. And I really think we need to see some more progress on the capital recycling program. This has been dragging on now for a long time. It was announced in April 2023. And you would have thought when they announced it that they had pretty good visibility on being able to achieve that. What we thought was they're going to do it by the end of that year, and obviously it's gone on and on. We need to see some disposals, I think. Home REIT I wanted to mention because they've announced a new management agreement. So unbelievably, the new manager has been in place already for 2 years, and that agreement expires for today. So there was an old fee, which is 0.75% of NAV, with £3 million minimum number. And they're switching that to kind of a monthly number, which adds up to about £2 million over the course of 12 months. And 10% of rents collected, which is pretty chunky. I mean, yeah, if this was a normal ongoing fund, we'd all be screaming, this is ridiculous, it's way too high. But there we go. This is obviously needs a lot of work. There's a cap of £1 million on that. So basically they get back to their £3 million again. And then everything changes if they sell the portfolio. Then the management fee drops off quite quickly. And there's sort of like a sort of caretaker amount of £42,000 a month until termination. Rents have been averaging about £1 million a month. This came from the end of April figures that they announced. And they had cash in the bank then, they had no debt, they had 857 properties, about 5 of them were up for sale. And they had offers for the whole portfolio. That with due diligence was started, and they thought they would get the sale done by Q3 2025, which is where we are now. So they have to get it done before the end of September if they're going to meet that deadline. But as we know, Home REIT are not brilliant at meeting deadlines. The money is supposed to be given out to shareholders, but everything is complicated by the shareholder litigation, and really it'd be good to see some progress on that. And obviously we still haven't even got the accounts, so this is why it's still suspended from trading. It's been suspended since January 2023, and they keep announcing they're going to definitely going to get these out, and they're not doing it. So in this thing that they said in April, they said we'll have the interim accounts for February 24 by the end of the second quarter 2025. We're way past that deadline. It hasn't appeared. They've only got 8 days to do the one after that. I just don't think this is going to happen. I can't see that the shares are going to relist before they announce the disposal, which is slightly frustrating too. And when they started talking about things in May, there'd been no real change to the litigation. As I say, it'd been really good to get on with this. In the meantime, the manager entities have gone bust, or they've gone into administration. That doesn't mean all is lost, because the whole point of the litigation is to try and go after the insurance pot that's there, hopefully. And that's the reason that I'm signed up to it, and I would like to see progress on this, and it's getting frustrating now that we haven't seen anything happening.